In the bustling heart of New York City, there's a place that symbolizes the ebbs and flows of global finance. It's the New York Stock Exchange, the NYSE. It's a place where fortunes are made and lost. The NYSE is a stage for the dreams and ambitions of countless individuals and corporations. It's a whirlwind of numbers, charts, and the constant clamor of commerce. The NYSE is more than just a building. It's a testament to the power of capitalism and the interconnectedness of our world. The story of the NYSE is not just about numbers and trades. It's about people. It's about the brokers who built their fortunes on the trading floor. It's about those who lost everything in the blink of an eye. It's about the visionaries who shaped its destiny. Our story begins in the late 18th century. The newly formed United States of America is finding its footing. Commerce is growing, and a new breed of entrepreneurs and investors is emerging. In the bustling coffee houses of New York City, these individuals gather to buy and sell government bonds. These informal gatherings were the precursor to the NYSE. Imagine a time before computers, before telephones, even before the telegraph. Information traveled slowly, often by word of mouth. Trust was paramount. In 1792, 24 of these stockbrokers decided to formalize their dealings. They gathered under a buttonwood tree on Wall Street. This wasn't just any street. It was named for the actual wall that once stood there, a testament to New York's Dutch heritage. Under the shade of the buttonwood, they signed an agreement that would change the course of financial history. The NYSE quickly outgrew its informal beginnings. In 1817, the organization adopted a formal constitution. It officially became the New York Stock and Exchange Board. This marked a transition from a loose association to a more structured institution. The first dedicated trading room was established. It provided a physical space for the bustling activity of the stock market. The iconic trading floor, with its frenetic energy and hand signals, was beginning to take shape. The volume of trading grew steadily. New companies listed their shares on the exchange. Railroads, canals, and the burgeoning industrial sector fueled investment opportunities. However, the early years were not without their challenges. The Panic of 1837, a major financial crisis, sent shockwaves through the NYSE. It highlighted the inherent risks and volatility of the market. Yet it also underscored the resilience of the exchange and its ability to adapt and recover. The mid-19th century brought a technological marvel that would revolutionize the NYSE, the telegraph. Samuel Morse's invention transformed communication. Information could now travel at the speed of electricity. This was a game changer for the stock market. Before the telegraph, news traveled slowly. Prices were often outdated. The telegraph allowed for real-time updates on market movements. Investors could react to news much faster. This led to increased trading activity and greater market efficiency. The telegraph also facilitated the growth of national markets. Investors from across the country could now participate in the NYSE. This interconnectedness further solidified the exchange's position as the leading financial center in the United States. However, this newfound speed also brought new challenges. The rapid dissemination of information could exacerbate market volatility. Rumors and speculation could spread like wildfire, leading to both booms and busts. Throughout its history, membership on the NYSE has been a highly coveted privilege. A seat on the exchange represents not just a place on the trading floor, but also a stake in a powerful financial institution. In the early days, the number of seats was limited. They were often passed down through families or sold to the highest bidder. Owning a seat on the NYSE was a symbol of wealth and influence. As the exchange grew, so did the value of its seats. Prices fluctuated with the market, reaching record highs during boom times. The purchase of a seat was a significant investment, often requiring substantial capital. The ownership structure of the NYSE evolved. In 1972, the exchange went public, with seats becoming shares in a publicly traded company. This move reflected the changing nature of the financial industry and the need for greater transparency and accessibility. The Roaring Twenties was a time of immense wealth creation, but also of rampant speculation and, let's face it, some questionable trading practices. The government, in the form of the Internal Revenue Service, couldn't help but notice the fortunes being made and lost on Wall Street. The IRS, tasked with collecting taxes, realized that the existing rules weren't equipped to handle the complexities of the stock market. How do you tax gains and losses made in the blink of an eye? How do you prevent investors from using loopholes to avoid paying their fair share? The IRS began to scrutinize trading practices more closely. One particular area of focus was something called wash sales. This is when an investor sells a losing stock and then immediately buys it back, often just to claim a tax deduction. The IRS's involvement in regulating Wall Street wasn't always welcomed. Many traders saw it as government overreach, an intrusion into their free market playground. But the reality was, the market's Wild West days were numbered. Wash sales were just the tip of the iceberg. The IRS uncovered a whole host of creative accounting techniques and outright manipulation designed to minimize tax liabilities. Some investors were even using multiple accounts to hide their true trading activity. The IRS introduced new rules to curb these practices. They clarified the definition of a wash sale, making it harder for investors to claim artificial losses. They also tightened reporting requirements, forcing traders to be more transparent about their dealings. These changes didn't sit well with everyone. Some argued that the IRS's crackdown would stifle investment and innovation. Others, however, saw it as a necessary step to ensure fairness and restore confidence in the market. The battle between regulators and traders was far from over. It was a game of cat and mouse, with each side trying to outmaneuver the other. But the IRS's involvement marked a turning point, a shift towards greater government oversight of the financial markets. Section 3. The Crash and the Aftermath, a Market in Chaos. The stock market crash of 1929, Black Thursday as it came to be known, sent shockwaves through the global financial system. The NYSE, the very heart of American capitalism, was in freefall. The crash exposed the fragility of the market and the dangers of unchecked speculation. Millions of investors, many of whom had borrowed heavily to buy stocks, saw their life savings wiped out in a matter of days. The crash had a ripple effect throughout the economy. Banks failed, businesses shuttered, unemployment soared. The Great Depression had begun. In the aftermath of the crash, there were calls for reform. The public demanded accountability. The government could no longer afford to take a hands-off approach to the markets. Section 4. A new era of regulation restoring trust. The Securities Act of 1933 and the Securities Exchange Act of 1934 were landmark pieces of legislation that reshaped the regulatory landscape for the NYSE and other exchanges. These acts aimed to restore investor confidence and prevent another crash. The 1933 Act focused on transparency in the securities markets. It required companies issuing stock to provide investors with accurate and complete information about their businesses. No more hiding behind vague prospectuses or shady accounting practices. The 1934 Act created the Securities and Exchange Commission, the SEC, a powerful new regulatory body tasked with overseeing the markets and enforcing the new rules. The SEC was given broad authority to investigate fraud, regulate trading practices, and require companies to disclose financial information. These reforms marked a turning point in the history of the NYSE. The era of self-regulation was over. The government now had a firm hand on the tiller, aiming to steer the markets towards greater stability and fairness. Section 1. The Crash's Echo. A dark cloud over Wall Street. The year is 1929. The stock market crash wasn't just a financial crisis, it was a national trauma. The NYSE, once a symbol of American prosperity, became synonymous with panic and despair. The trading floor, usually abuzz with activity, was eerily quiet. The ticker tape, which once struggled to keep up with the volume of trades, now seemed to mirror the slow, painful drip of a nation's hopes fading away. The air was thick with a sense of disbelief. How could this happen? How could a system so vibrant, so seemingly invincible, crumble so quickly? Brokers, once masters of the universe, stood in stunned silence, their faces etched with worry. The weight of the losses, the shattered dreams of countless investors, hung heavy in the air. The familiar roar of the crowd, the frantic hand signals, the shouts of triumph or despair, all replaced by an unsettling hush. The crash had exposed the dark underbelly of the roaring 20s, the reckless speculation, the unchecked greed, and the lack of oversight. The party was over, and the hangover was brutal. The NYSE and the nation were left to pick up the pieces. The Great Depression was a time of widespread hardship. Millions lost their jobs, homes, and savings. The stories of loss are heartbreaking. But amidst despair, there were stories of resilience. Families pulled together, sharing what little they had. Communities organized soup kitchens and bread lines. People adapted and survived. Section 3. Rebuilding from the rubble. A slow and painstaking process. The road to recovery from the Great Depression was long and arduous. The NYSE had to rebuild trust and confidence. Roosevelt's reforms, like the SEC, were crucial. The SEC brought regulation to prevent another crash. Companies had to be more transparent. Insider trading was cracked down on. Rules for margin buying were established. The NYSE strengthened its rules and procedures. Investors began to return, cautiously at first. Their confidence gradually grew. World War II spurred industrial production. The NYSE played a vital role in financing the war. A symbol of capitalism, the New York Stock Exchange, from its humble beginnings under a buttonwood tree, has evolved into a global icon, a powerful symbol of capitalism and the free market. The NYSE has weathered countless storms, financial panics, economic depressions, world wars, and technological upheavals. Through it all, it has adapted, innovated, and emerged stronger. Its resilience a testament to the enduring human spirit of enterprise and the pursuit of prosperity. The NYSE's legacy is not without its critics. Some argue that it represents the excesses of capitalism. Despite these criticisms, the NYSE remains a vital institution, a cornerstone of the global financial system. Section 2. The Digital Age, from Trading Floor to Cloud. The late 20th and early 21st centuries brought about a technological revolution. Computers, the internet, and algorithmic trading digitized the stock market. The once cacophonous trading floor has become more subdued. Electronic trading platforms now take center stage. Orders are executed in milliseconds. Algorithms analyze data at lightning speed. Investors can trade from anywhere with a few clicks. This digital transformation has brought greater efficiency and accessibility. It has also presented new challenges, like market manipulation. Robust cybersecurity measures are needed to protect against cyber attacks. The NYSE has embraced these changes, investing heavily in technology. It has adapted its rules to ensure a fair and orderly market. Section 3. The NYSE Today, a global marketplace. Today, the NYSE is more than just a stock exchange. It is a global marketplace, a hub for companies of all sizes from around the world to raise capital and grow their businesses. It lists thousands of companies, from blue-chip giants to innovative startups, representing a vast array of industries. The NYSE plays a vital role in connecting investors with investment opportunities. It provides a platform for individuals and institutions to diversify their portfolios, manage risk, and participate in the growth of the global economy. The NYSE continues to evolve, constantly adapting to the changing dynamics of the global financial landscape. It faces competition from other exchanges around the world. It must navigate the challenges posed by geopolitical uncertainty, economic volatility, and technological disruption. Yet, despite these challenges, the NYSE remains a beacon of financial innovation and a symbol of the enduring power of capitalism. Its story is a testament to the human spirit of ingenuity, resilience, and the relentless pursuit of progress. Share, like, and subscribe. Many blessings.